All right, so I'm gonna allow everybody to talk real quick. So you can ask me questions after. So it's gonna be pretty standard webinar. I'm gonna be breaking down what I'm gonna be looking for the week because I'm finally gonna be trading. I'm so excited. Even though my full deposit hasn't landed, I'm gonna try out two different brokers. So I'm gonna do maybe half and half. So I'll see how I set that up. But I'm finally gonna be trading, which is a little bit exciting for me. I haven't traded in like 30 days and it feels odd. But anybody want me to go over anything in specific first? Any currency pair or no preference? Just get started, really.
You could just go over your whole watch list.
Gold. All right, so I'm gonna start with gold. So for most of you guys who have been attending the last few webinars, one thing that I talked about after gold broke above this 1797 range, right, which is over here. You know, let's actually start. Let's do a full top-down analysis, right? What I'll do is I'll recap the last few breakdowns. And then we'll do a top-down analysis on where I see gold going potentially. So when it came down to gold, one thing that I was stating was that once gold actually broke above 1797 and we closed around 1813, I wanted to see a pullback into 1797. And if 1797 were to hold as support, then most likely we'd see price travel up to 1813, where if price broke above 1813, we'd head right to 1830. Then from there, we'll have to wait and see what happens. Now, why I look for these supply and demand levels is because what we're doing is we're building a range and we're looking for price to travel in between those ranges. So it becomes a little bit easier to, in quotations, predict price action itself, right? We're just making more educated hypothesis on where price will travel to next based off of these major supply and demand levels, instead of just randomly saying, yeah, you know, gold is rejecting 1813. I'm going to wait for gold to go down to 1720, which is super unrealistic to expect bigger moves like this. But when we look for these major levels and we really perform a real candlestick analysis and we look at these specific levels like we've identified here with 1813, right here should have been a big red flag for you to mark off this level just because of what price did every time it approached this specific level. These are one of the areas that you want to be paying attention to. Now that gold has broken above 1813 and we're currently trading at 1830, I am going to be expecting gold to give us some form of a pullback. Now, if we look at this 4-hour time frame, we can clearly see that price is in a bullish condition. We're slowly making higher highs and higher lows, even though this is almost a low there. No, we go to the daily time frame as well. We could see that structure holding pretty well. Now, when it comes to gold, and especially that we're in a new year, a new month, I like to start off on the monthly time frame and then slowly work my way down. Now, when it comes down to gold overall, prices rejected our lows down here that we have, which let's call it 1756. Right, so at the 1756 level, what we could see is price consolidate above it for the last few months since about May of 21. Now we're in January of 22. We've seen price time and time again reject and maintain itself above this level. I am going to be expecting gold to go long just because of how this bullish candlestick is formed. One, we've actually closed above this 1813 level, which if we look at the 1813 level, what we see are monthly closures. And notice how each month price failed to close above 1813, where we had multiple rejections of 1830. And then even here, price came all the way back up and rejected 1813, which you could see here. And then if we break it down to a lower time frame, it makes a little more sense as to why price rejected 1813 instead of it just being a random level. It was also a high for us. And what we're also going to be doing is marking off our previous month's highs and lows. And I'd like to kind of just go along and look at the trend itself and mark off my market structure. But now that I've kind of taken a bigger perspective on this monthly time frame, right, what I'm going to be looking for again is for price to pull back into this 1813 level, where I'll look for some form of a retest and then look for price to actually go long from there, where I'll then look to buy, right? Now, when it comes down to me actually looking to take a position on gold right now, I know some people are probably looking to sell gold. I'm just going to continue to wait for gold to actually look to come back down into this area again over here, where I'll look to take some form of a buy position after I get that candlestick confirmation, which roughly, if gold were to pull back to 1813, it'd be in between the 38.20 and 50% pullback range, which is fine. It's better than a 28.6. But when it comes down to me looking to take a long in this position, one thing that I want to wait for, obviously, is momentum slowing down, because I don't want bearish momentum to hold up. I want to see bearish momentum slow down significantly, and then look for some form of a price action signal where I could set myself up like this, where let's just say I were to take a position here. My stops are obviously going to be under 1813, and then my overall target would probably be somewhere along this 1830 level. Now, when it comes down to gold, again, on the 4-hour time frame, that would be more of a swing position. If we take a look at gold from this point to this point, it took price about 3 days to get there. One thing I'd possibly want to see also would be for gold to start counter trending, in the sense where we actually see lower lows and lower highs being made. Because when we see lower lows and lower highs be made on this 30-minute time frame, we know we're still in a bullish trend overall on the 4-hour time frame. But what we could wait for is that break of structure on this 30-minute time frame. We could wait for price to pull back down into a previous level of structure, where we'll look to take a buy position from there, because that's just added confluence to our favor, which will then take a trade up into 1830. That's if you want to play a little bit more conservative, because now we have a break of a counter trend, and then we also have the 3-leg extension on lower time frame, confirming that lower time frame bullish trend there. That's how I'm probably going to wait for gold to play out. I could take sells as well, but I wouldn't want to take a short position just yet. If I were to look to take a short position, because at the end of the day, I could do both, right? This is a huge range for gold, right? But I just know that overall, long term, we're looking to most likely buy. Because again, things could change overnight, right? But as of right now, my long-term bias is looking to buy on gold. And then my short term would be looking to wait for gold to actually go short. I need to go over the rest of my watch list, because I haven't even opened the market to see if there's any other opportunities that I could take in the meantime, while I'm waiting for gold to actually set up here. But so many things could change overnight. Now, if gold were to break above 1830, the simple thing to do again would be to wait for gold to actually come back down into 1830, where I'll look to take a long position from this area. And again, it's just the best buying opportunity possible on gold. And it comes down to the simple fact of supply and demand. If price is broken above this area, then I'm going to wait for price to come back down into the area, wait for that level of support to actually be confirmed, and then I'll look to take a buy from there. Because again, we want to only take trades at support and resistance levels where we know our stop loss order is going to be protected. And buying right now at resistance is not something I would actually do, just because again, there's selling pressure at resistance. I want to wait for the break of resistance and then a pullback back into resistance, wait for that confirmation for support to actually be formed, and then look to take a long on gold. But you just got to understand, when you wait for setups like that, it's not always going to happen, right? You can have a huge momentum like this, where gold just kind of breaks through the level and just continues to trade to the next level. And that's going to happen. You're going to miss out on the trade, but that's just part of the process of trading. And this is why we trade multiple different pairs, because if you miss on one specific trade, then, you know, just go through your watch list and look for the other possible trades that there could be. Anybody have any questions on gold before I move on? Anything they want me to cover really quick? Simple, right? I think it was pretty simple why I'm looking at, you know, what I'm looking for. So let's cover silver. So let's go to the monthly time frame, right? First impression is that silver on the monthly time frame actually maintained itself above this daily 22 level that we've been talking about for the last few webinars, right? Notice again how price has maintained itself above this area month after month after month. This is just another month that silver's maintained itself above the area. Now, when it comes down to this specific monthly candlestick, it is a strong bullish candlestick, yes, but it's not something that what would be the word? It would give me like an instant gratification, or if that's how you want to call it, where I get like an instant bias, right? Sometimes depending on the higher time frames, I already have an instant bias just by looking at a specific candlestick. But when it comes down to silver, like this is just one of those candlesticks that I would want to wait longer to see how things are going to play out, and I'd break it down to lower time frames and then go from there. So yes, we did reject support again, which we could see buyers come in long term, right? But if we take a look at this weekly time frame, the thing with silver is that it's been maintaining itself bearish for the last few weeks, and this could just be a regular pullback within this bearish move. I want to see how far price has pulled back here, probably 50%. So price has pulled back 50%, and at this point, one thing that I believe I covered, I don't know if it was in the last webinar or like 2 webinars ago, was that I want to see this week close. And then what's going to happen on the following week is that we could see price actually close with a bearish engulfing. If this weekly candlestick does close with a big bearish engulfing, then it's kind of obvious that we're going to see price continue to trade lower the following week. And that's how I set myself up when it comes down to those weeks and what I'm going to be looking for those weeks and where I'm going to be expecting silver to go within the long term. Right now, this 23 level is another area that I have marked off. It's just another area of support and resistance that I have marked off here. I'm going to go down to a daily time frame. Now, when it comes down to the daily, I want to see this daily candlestick close bearish engulfing for me to actually continue to look to go short. Now, one thing we could take a look at here is notice this high and how price is rejecting this high as well, and how price is also maintaining itself under this 50 moving average. So also with price rejecting this high up here, this previous daily high that it failed to break above. So far, things again could change by the New York session or the London session, is that price is maintaining itself under resistance. So as of right now, things are, for me, are looking to actually go short on silver. 4-hour time frame, we have some form of a double top here. Notice how once price actually came into this range, sellers came back into the market where price formed this big sell signal. Then you can look to take a position from this point on. Now, the only thing that is quite concerning to look to take a sell position right now is that currently price had broken above the range initially, where over here price closed back under the range right away. There's 2 big differences between how these candlesticks are playing out here. Over here, again, when it comes down to the basics of support and resistance, supply or demand, we have the touch, gap, and overlap. Price simply overlapped our level of resistance here. Over here, price broke above and candlesticks started forming above resistance. Now, price had approached this other area where we have these daily highs, these 4-hour highs up here, and then rejected that area. Now we're starting to see price actually go lower. Let's take a look at the lower time frame, see how this is forming here. So just like what I covered last time, is most likely if silver were to break under this level of support over here on this 30-minute time frame, we're going to see price travel down to this next 30-minute level, which is all the way down here. The case pretty much stays the same. If we could break under, let's just say this low over here or this low over here, then most likely we're going to travel back down into 22.70,000. Let's leave it at. But at this point in time, it's Sunday. We're not even near London session. So I would want to wait until London session to make a better decision on what I'm going to be looking for. Ultimately, the best setup to actually look to short silver would be to wait for silver to come back into resistance, wait for selling pressure to come back into the market where we'll look for big rejection candlesticks like this one, and then look to take a short. That's going to be the best setup at that point in time. And then from there, what we could do is set ourselves up with some form of a position where we have our stops above resistance and targets be down here at this level of support, maybe something like this. Other than that, I would want to wait and see how this daily candlestick closes. Because if this daily candlestick closes engulfing, one, we're going to be closing back under these daily closures over here, which is important because again, we're starting to see price trade lower. And 2, on top of that, we're going to see price actually close under the previous day's low, which in turn shows us that price is making lower lows. Now, the one thing again that is quite significant for me is how price had rejected the daily highs over here. So that we've rejected the daily highs, we could see price actually continue to trade lower, and especially that the new monthly candlestick had just opened up. We're going to see price create a low and then a high, and then we'll see the actual trend by the end of the month. That's typically what happens with these monthly candles is by the first week or two of the month, we could see a potential pullback. And then by the last 2 weeks, we'll see price go in the direction normally it's going to go to. Sometimes that's not always the case. We could just see price go bearish, especially if it's really going to go bearish. We'll just see the monthly candlestick continue to trade lower. But at this point in time, things right now, especially reading market structure, I would be looking for sells. Again, just because prices pulled back 50%, the way the monthly candlestick formed isn't too intriguing for me to look to take buy positions. Then on this daily time frame, we have price rejecting these daily highs. Now, it'll be a different story if price actually does break above these daily highs. This previous high right here, if price breaks above it, most likely we're going to continue to go up higher. Now you have to ask yourselves, where could we go up higher to? And that for me is over here. This is where I would pay attention to for price to actually trade higher if price were to break above this daily level, just because this is where most likely we're going to see more selling pressure again. Now, what happens there? I'd have to wait and see price action to make another decision or another hypothesis on market direction. But ultimately, if price is going to reject that area, it's going to go back down, possibly to this area here, maybe even this area. If it breaks above, then we could see this area all the way up here. Again, it's the same concept that I covered on gold. It's just a complete different currency. Just how I said, hey, if price actually does break this area and comes up to this area, I'd want to wait for a pullback into this area, wait for support to form, for it to then come back to this area, 1813. And if 1813 breaks, we're going to look for 1830, where at that point in time, we're just going to have to wait and see what price action looks like at that time, because sometimes it'll break right through, just like this price action. Sometimes it'll reject just how this price action is forming. Everybody understand the commodity section so far? Need answers here. Yes, no.
Yeah.
Yes. Was it crystal clear?
Super crystal clear.
All right, cool. Let me cover GJ. Or GU, not GJ. Now, GU is a little bit more interesting because on the monthly time frame, what it looks like is prices missing highs. Well, to be more specific, higher highs and higher lows. Now, I'm actually going to clear my chart. Now, if we look at this monthly time frame, right, and I were to put a line, let's just call it about here. What we see is price do something like this, where it breaks under, retest, rejection, retest, rejection, then came all the way here. Now we've broken above. Now prices came to the area and we've bounced back above, right? So to me, what this looks like is a pretty clean break and retest pattern where we could see GU actually trade higher. Now, at this point in time, this isn't the strongest monthly candlestick we're going to be, paying a lot of attention to, but it does tell us detail. It does show us that, hey, at one point in time, sellers were holding this area for a few years. This was 2019, right? Now, buyers broke above this area here, and buyers are starting to hold this area yet again. So what I could expect is for this month to actually pull all the way back down into this level. And then at that point in time, I'll most likely look to take a long position there. So we have this entire zone marked off here, right? And this is the zone that we were talking about over here, same exact one. Now, the trend is still bearish. Yes, market structure is still bearish on this weekly time frame. We're seeing price make lower lows, lower highs. If we take a look at our structure, here we have our previous lower high. Here we have our previous lower low. Here we have a lower low as well. So this could be a potential lower high point. Definitely, I would be paying attention for short positions. I would continue to look for short positions until price gets into this area. Once price gets into this area, it is just simply a retest on the monthly. We'd have to wait and see if buyers hold that area. If buyers hold this area, then we're going to continue to trade higher, right? At that point in time, obviously, we're going to be looking to take a buy position. But now when we break it down to a lower time frame, let's go to like the daily time frame, right? We have broken above daily structure. We've broken above the moving average here, the 50 moving average. But again, the structure is still bearish on the weekly. You have to remember this line right here is the weekly lower low point. If we go to the weekly time frame, we can see that this was our previous lower low point, even though price, this is the lowest low, and here we have the lowest close. This is where we found previous resistance or previous support. If I were to drag this out, maybe do a little adjustment, we can see that here as well. Then we can also see that over here as well. This is where, again, it comes down to support and resistance, supply, demand. Now, this was a previous level of resistance buyers were holding. Now it seems like sellers are holding this area of previous support. So it definitely could hold as resistance. Again, you have to ask yourselves, okay, well, if price does reject this level of resistance, where could we see price travel to next, and how can I take advantage of this opportunity? At this point in time, the structure on this 4-hour time frame is still bullish. So in a situation like this, what I'm going to be waiting for is for price to give me a simple retest. If price can give me that retest and rejection of this zone and not start trading above these highs, then I'm going to look to take price short, where we could see price come all the way down into this area where we could look to buy again. And that's just looking at it from a long-term perspective, right? Now, we know that price is still in a bullish condition. Here we have higher low, followed up by higher low, followed up by higher low, followed up by higher low. Once we see price start breaking these levels of support, we can just anticipate price to continue to trade lower. But again, what I don't want to see is for price to go down, pull back up, give us some form of a double top, or at least some form of a lower high point, and then break that structure. We want to see price start forming lower lows and lower highs. We can even look for that on like a 30-minute time frame. The moving averages are already starting to cross over. So again, one thing I would want to see is for price to either come back up into this range where I'll look to take a short position, which how you take the short position ultimately is going to depend on you as a trader. If you want to wait for the sell signal, if you want to trade right at the level, if you want to scale into an entry, ultimately it's up to you, right? But again, it's going to be one of the two. Either price come back up, retest, where I'll look to take price shorter, or for price to do maybe something like this, where we have another 3-leg extension confirming this bearish trend, where I'll look to take a short position. And that's just because I see price pulling back all the way back down into this area now that it's rejected for a retest, and the weekly time frame is still bearish, right? The weekly time frame is still maintaining that bearish structure where it's forming lower lows and lower highs. So I do anticipate price to go down for a short period of time, where we may then continue to actually trade higher. I don't expect price to go bearish for a very long time, but it would definitely be nice to see price pull back into this area where we could look to take a long position. And then once price actually pulls back into the area to take a long position, that'll just give us this 3-leg extension here on the daily. Because if we look at structure here on the daily, we see price doing something like this, right? As of right now, it's still pulling back. What we want to wait for is that confirmation for price to actually pull back into our previous level of structure, which here we have our previous structure point, where we'll then look for that higher low point, and then we'll have that 3-leg extension if price can continue to trade higher. Again, things change over time. So, take this analysis and just pay attention to it, but at the same time, don't be married to it, because things could always change, right? That's my current thoughts on GU. Then when it comes down, that's how I'm prepping myself for the week. Now, when it comes down to GJ, I don't remember who exactly brought it up to me, right? But one thing that I said was that I was going to be paying attention to this 156 level for GJ, and I was going to be anticipating price to come all the way up to 156. I was calling 156 after we ended up breaking above this area, and then after we broke above this area here. For GJ, I would definitely need to see a little more price action on the daily time frame to make a better decision. Ultimately, if we look at this monthly time frame, we're still trading under this level of resistance. Now, this is a big monthly candlestick. Does that mean that price could continue to trade higher? Definitely, but at the same time, we're still trading under resistance, right? Sometimes it's not really about the what, but mainly about the where that these candlesticks are actually printing. And the fact that we're maintaining under resistance, I'm going to be looking to take short positions here on GJ. Now, one thing that you could probably also spot is this big head and shoulders pattern actually playing out. And again, especially that price is trading at a level that we haven't been to since December of 2017 or January of 2018. I am going to be expecting sellers to come to the market, maybe not for a long time, but at least for a period of time where we will see price actually continue to trade lower. So at this point in time, I'm going to be looking to go short on GJ. I'm going to be very curious to see what GJ does in this area over here, though. And again, things can always change. If price simply breaks above resistance, wait for the pullback down into resistance, wait for support to actually form, and then look to take a buy. That's how you simply change your analysis on the go. And again, it's all based off support and resistance. Something has changed. Let me actually put that level back, because this is the level on the weekly time frame. Remember, this is weekly resistance over here, right? All throughout this range is weekly resistance. So as long as price maintains under this weekly resistance, I'm gonna continue. I'm not gonna say weird because it's my bias. I'm gonna continue to look to take a short position. Now, if price breaks above this area, it's obvious we're gonna go to 156, 600, let's call it, right? But it's very simple in the approach. It's almost the same approach to every pair, but they're all very different situations, all based off of supply and demand. And all you're doing is looking at the probabilities of what price might do next, managing your risk and looking for the best potential risk to reward ratios off of these supply and demand levels. Now, when it comes to GJ, if you're looking at it from an intraday perspective, really you have two options here. Wait for price to pull back into resistance where you'll look to take a short position, right? Wait for some form of a confirmation candle, or wait for this break of structure here, where if price breaks under, wait for the pullback into the range, and then look to target 155, 175. That's what I'm going to be waiting for. You could potentially set yourself up with maybe something like this. Let's just say that's what price action looks like. Potentially a 38.20. And again, we also have all of this resistance throughout this range here. So if price does end up breaking under the support, wait for the support to actually hold as resistance and then look to go short there. And at that point in time, you could set yourself up with a trade that looks something maybe like this, right? Where you're targeting this level of support down here, then your stops could be somewhat above resistance. I would be a little bit more, what's the word here? Forgiving with my stop loss on GJ, because GJ Gold, they tend to throw big wicks sometimes, especially with these like break and retest setups, a lot of liquidity grabs, especially on GJ. And I would set myself up potentially with something like this, right? So does anybody have any questions on the breakdown? Anything anybody wants me to go over? I do got to cut this webinar short because I need to solve what's going on here with Kajabi so I can get the rest of the content out to you guys. Anybody have any questions?
Yo, Raul.
So,
If you're in a swing trade, can
yeah.
you take like intraday trades in between?
I mean, you probably could. I personally wouldn't, just because I'd want to focus on the swing trade itself. Are you talking about one pair or different pairs?
One pair.
Then no, I personally, I mean, you could, but I would just focus on the one swing trade. I wouldn't be hopping around too much.
All right. And tomorrow there's like holiday, right? Because I saw on Forex Factory.
My bad, say it again.
On Forex Factory, it says like there's like a bank holiday or something.
Yeah.
So would you be trading, or are you what's gonna happen?
Not on a bank holiday, no. Not on a bank.
Raul, is this recording going to be uploaded somewhere?
Yeah, it's going to be uploaded to the course. So like I already uploaded the last 2 webinars we've done, but every single webinar that I'm going to do, except for the peer review groups, will be uploaded on the course.
Perfect. Thank you.
Yeah, that's like part 14. That's like the last part of the course. So it's going to be, again, a lot of value that you can get off all these webinars.
Raul,
Yeah, what's up, bro?
can you go over real quick how do we can determine when you're gonna trade a higher time frame or a 30-minute time frame? Because I was looking on GU and it said something about the retest on the resistance, and when you change to the 30-minute time frame, I was wondering if we have a break below this low right there.
This one?
Yeah, we
Okay.
can to the retest and then take a short,
For sure.
for example.
Yeah, for sure. So you could always just wait for price to come back break this level of support where you can see price do something like this, and then wait for that retest, look to take price down to here. But the thing is that there has to be a little bit more to go on. Sometimes price will just break it and then come back into the level and then retest it. And you'll look for that rejection there. Like it looks like price may actually go straight down into this area. Or sometimes price will come up to here. And then you know, it'll come all the way up to here, and then it'll do something like this, and then this, and then this. But by the time all of this happens, it's been like 2 or 3 days. You know what I mean? So you just gotta wait, especially if you're trading like more intraday timeframes, you really gotta wait closer to session to make the real decision on how you're gonna plan things. Now, obviously, this is like I wouldn't even want to call this like a pre-market analysis, because typically what I do on Sundays is I kind of prepare myself what we can expect the week ahead. That's why I take like a bigger picture look on things. But when it comes down to like a pre and post market analysis, the pre-market analysis, you're like an hour or two away before session. So sometimes not much is going to change, and neither will your analysis. But when you make an analysis on Sundays, you're simply preparing yourself for the week ahead. But I would wait until session to make a better decision on what you're going to do. Because GJ or GU could pull back into here. And then by session, we're trading this area, and it's like, okay, cool. I'm just going to wait for a rejection. I'm going to look to go short, and I'll probably short all the way into this area, because I don't know if price is going to break that area. Because then what could happen is price comes into this area and then comes all the way up, it comes back down and does something like this. I've seen it happen hundreds of times. That's why, you know, if you're going to trade intraday, I would just stick with intraday timeframes and intraday levels, intraday take profits, intraday stop losses as well.
And this question, how do we can determine this? Either I'm gonna trade intraday or, a day trade. How do we can do this? Because I feel like I am patient, but not enough to swing like 3 days, Or I would say like a long term. I wouldn't say 3 days long term, but a long time. So I would say a day trade. I was in your signal chat. All the signals, I was like, that's good, but I feel confused when to determine,
Well,
like
I would just focus on being good at one thing.
Mhm.
If you try and be good at swing trading and day trading, you're just gonna put more stress on yourself. Like, I mean, you said holding trades for 3 days is not that big of a deal for you.
So I was, I said 3 days, just putting a long perspective on it. But for me, I am more comfortable holding for like a day, couple hours, I would say from New York to London, maybe something like that.
In that case, I would just focus on day trading
Mhm.
at that point. I mean, there's been times where I've held trades for like 2 or 3 days, even though they're day trades. They just hadn't gotten to my targets, and the trades are still valid. And I just hold my position because my trade is still valid ultimately at the end of the day. But I know personally, I'm always been a lot better at intraday levels and what price could do from an intraday perspective. Even though I could do both, sometimes I just don't have the patience in me to hold a position for so long. And sometimes I do have the patience in me. It's very situational for me personally. And when it comes down to what I'm trying to do with the account as well, because if I'm going to be doing some form of like a challenge, I'll look for trades that pay higher risk to reward ratios. And typically trades that pay higher risk to reward ratios take longer to play out.
Okay.
Because I'm not comfortable with tiny stop losses, because you're just going to get stopped out most of the time, and the price is still going to go in your favor. But really, like, you want to focus, if you're good at day trading, just focus on day trading. You don't have to be swing trading.
Okay. And then for the zones, I just, go to an hour, 30-minute maybe to find those intraday zones and, set TP1, TP2.
Yeah, basically.
And my final TP could be the support zone that we possibly are waiting for the
Yeah, the more major
Long-
zones, like
Yeah.
sort of the hour time frame, like you could set take profit, like if you're gonna be shorting GU, you could set, definitely I'd say this level here. I would say this level here. Right? Then we could do this level here, and then we have this level here. So what I've done is I've just set ranges for myself. If let's say I'm short up here, it's TP1, TP2, TP3, TP4. But then again, like, for price to go from this point to this point, it took a week. And it's like, are you really going to hold that position for the week? And then you have another problem on your hands. Not even just holding the position, are you going to be able to hold drawdown? Because once you see that from this point, let's say you bought right here at this point, to this point, you're up $5,000. Now you're only up $2,500 on prices here. Are you still going to be able to hold? Again, and it comes down to trading psychology, because your target is up here. Let's just say for, I don't know, $10,000. We'll leave it at, right? Are you going to be able to hold through this swing? And now let's say you're up here $7,500 and prices all the way back down here. And now, you're up only $2,500. Are you still going to be able to hold through and stick to your overall target? It's just a lot of things when it comes down to it. But again, practice makes perfect, and you're only going to ever get better at anything with experience.
All right. Thanks, man. Appreciate that.
Yeah, bro, no problem.
So,
Any other
bro,
questions? Let's go, bro.
can you show me like your moving average setup, please?
My back, can you say it again?
Can you show me your moving average setup?
Yeah, I got you. So my moving average, this is sessions. My moving average is a 20 blue estimate, which is actually.
So exactly like how you get it like from the indicators. Can you show me exactly?
Yeah, so you just go to here, indicators, type in simple, and then you'll see simple moving averages. Let's just say I'm going to use that one. In this situation, there's a bunch of them. So I'm just going to go to settings. Let's see, I'm going to turn off SMA 3, 4, 5, 6, 7, wow, 8, 9, 10. I'm going to turn off all of these other ones.
Okay.
I'm going to make one blue. I'm going to make the second one red. You're going to go to inputs. SMA 1, it's going to be a 21. SMA 2 is going to be a 50. Just press OK.
All right, I got you. Thank you.
Yeah. Cool. Anybody else have any other questions? I think I'm going to cut the webinar off in like 8 minutes here, like at 10:30, so I could get this other stuff done.
Yo, bro, can you hear me?
All right, Raul.
Yeah. What's up, bro?
On gold, you were saying that basically you can look for it to go down to the 18-13 level and probably reject. But just like how you were talking about in GU, wouldn't you look for it to retest the previous high and then go down?
Yeah, if you're looking for shorts, for sure. You can either, let's say you're trading a 30-minute, you can either wait for price to come up, wait for it to go down. You could look to sell here, or you could wait for price to pull back into your previous structure level, look to sell there, or you can just wait for price to do something like this, where you'd now have a 1, 2, 3 leg extension, previous structure, look to sell here. It's very situational. It's very situational. But ultimately, if you're going to look to go short, then again, you'd want to wait for some form of a pullback. You just don't want to just short to sell. It's patience.
Okay.
Yo, Raul, if I'm trying to intraday trade, where do I set my support and resistance on like the daily, the weekly, or should I stick to like the 4-hour, 1 hour?
You always got to know where you are on the daily time frame. You always got to know where you are on the weekly time frame and the 4-hour time frame. Those are your more important levels. Big money is going to be moving with those higher time frames. Then from there, you can make, I don't know if I want to use a word. You can then determine what your intraday levels are from after determining what your higher time frame levels are. Because again, when it comes down to like intraday levels, they're not as important as your higher time frame levels.
All right, but thank you, bro.
Yeah. Any other? I didn't even check the chat. I know not everybody has. Anybody have any other questions? Let me see. Do you think trading only gold and silver can be more profitable than trading 4 or 6 pairs? I wouldn't even be focusing on 4 or 6 pairs. I think that's way too many. You should just be focusing maybe 3 pairs at most. I think 4 to 6 pairs is super, what is that? Super exaggerated. You don't want to be trading so many pairs.
Stressful.
What happened?
I said that was just stressful.
Yeah, literally. You're gonna have gray hairs.
And we bald up top. You don't have a receding hairline.
Literally.
Yo, Raul,
What's up, bro?
I just like this week, like after watching like your videos and stuff on the liquidity grabs, because that was one of my problems,
Okay.
like avoiding the liquidity pools. And I seen that because I was on the 4-hour time frame a lot, and even though it's a big time frame, like it's still a lot of like minor levels. So I scaled up to the daily, and I've been able to avoid like a lot of the liquidity, like like when they wick you out.
Yeah,
I just wanted to say that because that might help a couple people with the time frame thing. Like the
sure.
daily helped me avoid a lot of the liquidity grabs.
100%. I mean, there's always going to be like liquidity grabs, especially like if there's going to be a big move. There's just going to be a liquidity grab. I don't want to say all the time, but most of the time there will be a big liquidity grab when there's going to be big moves. But I mean, if you just kind of like back test and you mark off your major levels, like you could put a major level right here. People know that there's people buying in this area. Look at this wick, look at this wick, look at this one. And I wouldn't even say this is a liquidity grab here, but this one, have this one most definitely. I mean, the only way to really avoid liquidity grabs is just either bigger stop losses, or if you get stopped out, you get back in if the trade is still valid. But I've seen some nasty things go down where there's like a major level of resistance here and price does bearish candlestick with a huge wick to the downside, and then you have another bigger wick to the downside, then you have a bullish candlestick. But typically, like, this is news from what I've experienced, at least. Cool. All right, guys, does anybody have any other questions? Oh, there's a chat. I was looking for it. I'm like, why is my chat not opening? With me just getting into the trading course for sure, beginner level, what should I focus on this month? Because there's a lot of information that I'm taking in, but I want to narrow it down and really take it in. What should that be? So when it comes down to like a beginner level, right? After you've already passed like the real beginner level where you're learning about what you're even trading and, you're learning about the platforms and tools, you're going to head over directly into the market conditions section. So you literally just got to take it stage by stage on the course. You learn, take notes, and apply. Then you move on from there. If you ever have any questions, you could contact me, obviously, after the webinar, and I have this solved. I'll be answering everyone's DMs at DMing. I don't have much though. Do you use pivot points? No, I don't. I feel like pivot points are just another way of determining support and resistance. Cool. Anybody else have any other questions? Anything they want me to cover before I end the webinar? Let me check the Discord real quick. So
Yeah, I have a question.
What's up?
So when you're looking for like candle entry signals, are you looking for them like on the 4-hour, or which time frame? Is it all of the time frames? Like the higher the time frame, the candle signal is stronger if it's on a higher time frame? Is that how that
100%.
works? Okay.
The higher the time frame, the stronger the signal itself is going to be. Sometimes I'll take, like I said, if I'm going to be trading like an intraday level, I'll trade only that intraday level and just wait for the intraday signals. But if I'm looking at like these major levels, right, like down here, right, once I see a signal like this, it's like, okay, buyers came in the market, we're most likely looking to go up. How can I position myself where I'm going to look to get in on this move? That point in time, I'll break it down to a lower time frame and see how things go from there. you can wait for pullbacks, et cetera, et cetera.
Thank you.
Yeah. So
Hey, Raul, just a quick question. Do you have any rule of thumb, like for the stop losses at the beginner level?
I mean, it all comes down, it's all kind of the same ideology. Like, it doesn't really matter what level you're at. But again, you want to identify resistances here, support is here. If I'm looking to, let's just say you have identified prices in a range. If I'm looking to sell at resistance, right, I'm going to wait for my signal. My signal is here. My stop loss is going above resistance, right? That's like the core principle. But it's very situational. So I'm trying to find probably a better example. So like, let's say it was silver, right? This is just gonna be a random trade I'm putting out there. It's not what I'm actually looking for, obviously. The situation, let's say if I were to sell here, right? Whoops, that's the wrong one. If I were to sell here, my stop loss is gonna go probably somewhere here, right? Where it's above the previous high of the resistance. And it's still a little bit higher just in case if price were to come up, I'm giving it a little more wiggle room to kind of play around and fluctuate before either continuing to go up and hit my stop loss or, rejecting and going down. There's been times where I've been maybe like a pip or two away from getting stopped out and I get saved just because my stop loss was maybe like a few pips higher than, the previous high itself. But yeah, it's all kind of like the same foundation, really.
Thanks.
So your
Thank you.
stop loss isn't really like a pip count. It's more like above support or resistance. Or
Yeah,
above or below. Okay.
yeah, basically, because again, like, so that level of support or that level of resistance is used in quotations. I don't want to say protect, but you could call it that for sure, to protect our stop loss. And if the stop loss obviously does get hit, we placed it under or above that level of support and resistance, and we've determined that this is where we're going to get out for long. That's the thing about stop losses. It's I'm placing my stop here because if price hits this area, I'm wrong and I want to get out of my position.
Yeah.
It's that predetermined risk. But I'm gonna stop the recording.